Morning, good afternoon, good evening, depending on where you're connecting. Can you hear me? Can you hear me? Confirm you can hear me. Also confirm you can see my screen. I'm so excited to have you in today's live stream. You're welcome. You're welcome. Confirm you can hear me loud and clear, and you can also see my screen. How's been trading? Hope it's been profitable. If you have any question, if there's any pair you're considering trading today and you want us to look at it together, just drop it in the comment section. Confirm you can hear me loud and clear. If there's any pair you want me to analyze, let me know in the comment section. Let me know in the comment section. Can you guys hear me? I want to see your comments if you can hear me. Can you hear me? Can you hear me? Okay, I want to believe you guys you can hear me. Okay, so we'll start by looking at the calendar. Today is 4th of June. Okay, 4th of June 2025. And then we are expecting a major news from the United States by 3 p.m. ISM services PMI will be released by 3 p.m. Nigerian time. Australia released its gross domestic products data at the early hours of today. That was around 2:30 a.m. Nigerian time, and as you can see, the data was negative for Australia. As you can see, the actual is less than the forecast, which indicates that Australian dollar might be weak today. Okay, it indicates the Australian dollar might be bearish today. Okay, then by 1:15 also, the United States will be releasing its ADP non-farm employment change. The previous was 62 and the forecast is 111K. So they are expecting an increase from 62 to 111K. That's about 50K difference. Yeah, 50K difference. Then by 2:45, Canada will be releasing its rate statement, overnight rate. And by 3:30 p.m., Canada will release the Bank of Canada on those pairs. Expect high volatility on those pairs. Okay, from 1:15 to 3 p.m. Okay, so let's look at the chart. We'll start by looking at DXY. As you all know, we use the DXY to define the trend for the dollar. Okay, we need to know if the dollar is bullish or bearish because that will determine the orders we would execute on the major currency pairs. Okay, if the dollar is bullish, we want to sell pairs like GBP USD, Euro USD. All the pairs that have USD as the counter will be sold if DXY is bullish. If DXY is bearish, all the pairs that have dollar as the counter will be bought. Okay, so let's start with DXY. We'll start with the daily time frame. We are day indicates change in trend from bearish to bullish. This is bullish Marubuzu, okay? And you can also see what it did yesterday was to clear the liquidity residing at this previous low. This was last week low. So after they cleared the liquidity residing at the low of last week candle, they bought. The institutions bought, and the market closed strongly. That's why closed strongly bullish yesterday. Okay, and also if you apply your Fibonacci to this swing high, you would also see that DXY is at a discount area, and at discounts you don't sell. You don't sell. You can see DXY is at a discount area, and at discount you don't sell. You should look for buys at discounts. Okay, so my bias for DXY today is buy. I'm looking for buy opportunity on DXY. Okay, it means I'll be All right. Hello, hello, hello. I'm back. Can you hear me? Can you hear me? Can you hear me? I'm back. I'm back. I had to switch network. Can you hear me? Can you hear me? Can you hear me now? Please confirm you can hear me now. Confirm you can hear me. Can you hear me? Can you hear me? Confirm you can hear me. Also confirm you can see my screen. Okay, so on GBP USD daily, like I said, yesterday candle closed bearish. This is a spinning top indicating change in trend from bullish to bearish. So let's go down to 4 hour after the close of yesterday candle. What do we have on 4 hour? Let's see. Okay, on 4 hour, you can see we had what looks like an engulfing pattern here. Can you see this? Yeah, this is an engulfing pattern on 4 hour time frame. And also, if you go to lower time frame, I think there's a fair value gap after the formation. I think the formation of this engulfing pattern, I think a fair value gap was created, and that could be the reason for this retracement. Let's go down to 1 hour. So you can see the fair value gap is created on 1 hour time frame yesterday. You can see the fair value gap is created. And I think that is the reason for this retracement. Price tested that level. That gap got filled yesterday around what time? Even this early hours of today, the gap got filled. You can see around 2 a.m. Nigerian time. And this morning, it's just retested that level. And the reason could be this, the high of this candle. Okay, they know a lot of retail traders would have sold after the formation of this pattern. This looks like a bearish reversal pattern. A lot of retail traders would have sold, and their stop losses will be residing at this previous high. So I think what they've done this morning was to clear the liquidity residing at this previous high, and it's time to sell on GBP USD. That's what I see playing out on GBP USD. Okay, if 1 hour candle closes below this zone, if 1 hour candle closes below this zone, you should consider selling GBP USD. And if you are selling GBP USD below this zone, wait for, okay, set your stop loss above this level. Okay, you can use 30 pips. 30 pips as stop loss, your stop loss must be above this high, because these highs are areas of liquidity. They are still going to come for the stop losses residing at this high. Might not be today, maybe before the week ends, they are going to come for the stop losses residing at this previous high. So your stop loss must be above these highs. Okay. So if you're selling, you can see I identified this level yesterday, this fair value gap. That will be the next draw on liquidity. And if price breaks out from these fair value gaps, then the next draw on liquidity will be this fair value gap. That's my take. So if you are selling GBP USD today, your TP should be at these levels. You can use any of these levels as your TP. Okay. So if you are risking 30 pips, you ensure that your take profit doesn't go below 50 pips. Okay. So if you are risking 30 pips, let's say you execute a sell from this current market price and your stop loss is 30 pips, it means you can't use this level as your TP, because this is just 33 pips from your entry. You also can't use this level, which is just on 40 pips from your entry. Then I think you should consider this level. Okay, this is about 47 pips, 30 to 47, it's still okay. But I personally, I'll be aiming for this level, not less than 50 pips. Okay, my target will be 50 pips. 50 pips if I'm risking 30 pips. Okay, so that's my take on GBP USD. I'm bearish on GBP USD today. If you have any question, any pair you want me to analyze, let me know in the comment section. Please, we have to manage the network. The network is very poor, and I think it's due to the weather. Okay. Okay, so let's look at Euro USD, positively correlated with GBP USD. So if you're considering selling GBP USD, then you should look for sales also on Euro USD. So let's start with the daily. You can see the daily candle closed strongly bearish. Strongly bearish. If you apply your Fibonacci from this swing high to this swing low, you can see price is at a premium area. You can see price is at premium area, and at premium you sell and not buy. You look for sales. Once price gets into the premium area, you wait for a bearish reversal pattern to form before you sell. Okay, so you can see yesterday candle closed strongly bearish, and I think after the formation of this candle here, after the formation of this daily candle, I think a fair value gap was created at this point, and that could be the reason for the pullback. Okay, that could be the reason for the pullback. That could be the reason for the pullback. Okay, let's confirm that on 4-hour time frame and 1-hour time frame. Let's see. Okay, so you can see on 4-hour, if you shine your eyes well, you would see that we had a tiny fair value gap here. You can see we had a tiny fair value gap here, and that could be the reason for the pullback. You can see price came, tested that fair value gap, but it didn't fill it, and there was a strong rejection from that area. And you can see the pattern that formed after price tested that level. At this point, this was the first test. You can see. So after the formation of this spinning top and this doji candle, they know a lot of retail traders would have sold, right? They know a lot of retail traders would have sold from this point, and their stop losses will be residing at this previous high. So what they did was to clear all the liquidity residing at this previous high before selling. Okay, and this morning, what can you see on 4-hour time frame? On 4-hour time frame, you can see we had a fair value gap here that was created yesterday. And you see this fair value gap? That fair value gap was created yesterday. Price pulled back this morning to fill that fair value gap. You can see price pulled back to fill that fair value gap, and also the highs of this candle. The highs of this candle was area of liquidity. These highs, okay, a lot of people would have sold after the formation of these patterns. You can see a lot of people would have sold. Some would have bought from this point after the formation of this spinning bottom, inverted hammer, bullish candle. Many retail traders would have bought, and where would they have their stop losses? their stop losses will be residing at these lows. So what they did, the first thing they did was to clear sell side liquidity, and next is to clear buy side liquidity. So they've cleared sell side liquidity, they've cleared buy side liquidity. I think the next thing to do is to sell. Okay, so I see EU selling. Okay, EU is set for sell. If 1 hour candle closes below this zone, then you should consider selling EU. You should consider selling EU. And if you are selling EU, your stop loss must be above this level. So you can see that the risk on EU is high compared to GBP USD. Can you see that? If you want to take this trade on EU, the risk here is 63 pips, but GU is 30 pips. You can see that. But also, if you're taking this risk, 60 something pips, your TP also will be high. Your TP will be close to 100 pips on EU. So you need to be comfortable with whatever risk you're. If you have small, if your capital is very small, then you should consider taking the risk on GU. Okay, you might not be able to afford taking the risk on EU. So you trade GU, okay, because the risk is less and your account can accommodate that risk. These are the things you consider before you choose the pair to trade. You need to consider the risk. If your account can accommodate the risk, then you trade that pair. If the risk on that pair is high and you know your account can't accommodate it, then you have to trade the one with less risk, though the reward also will be less. Okay, the higher the risk, the higher the reward. Okay, so that's it for Euro USD. I'm looking for sales. All I'm waiting for is this for this 1 hour candle to close. Once it closes bearish below this zone, I would sell Euro USD. Okay, I will sell Euro USD. Same for GBP USD. I told you my entry. If 1 hour candle closes below this zone, I would sell Euro USD. Okay, these are technical buyers. Okay, these are technical buyers based on price action. Remember, there are fundamentals. We're expecting major news from the United States by between 1:30 and 3 p.m. That could also influence price action. Okay, but technically, these pairs are set for sell. Okay, which other pair do you want us to look at? Which other pair do you want us to look at? Let me know in the comment section. Which other pair do you want us to look at? Okay, let's look at gold. Okay, I know most of you trade gold. Let's look at gold. Okay, daily. You can see yesterday candle closed strongly bearish. It's closed strongly bearish. That tells me gold is bearish. Okay, if we apply Fibonacci, we want to take it from this swing high to this swing low, or from this swing high, okay, to this swing low. Price is at extreme premium. You can see is at extreme premium. You can either work with this, but I think this has already played out. If you apply your Fibonacci from this swing low, if you're working with this previous one, it would have been from this point to this point. Okay, from this swing high to this swing low, price pulled back to premium. You can see, so this one has played out. So it's best you work with this one. This is the most recent range, this swing high and this swing low. Okay, so I would like to see gold pull back. We have this fair value gap. I think this is where gold is aiming for, this fair value gap here. Okay, let's see, let's go down to 4 hours. Let's see if there's a fair value gap below that. Okay, so gold is likely going to come fill this fair value gap. Okay, no. Okay, so it's likely going to come fill this fair value gap, which is at a discount area. You can see this fair value gap, though we have this fair value gap, but this one is at premium. It's above equilibrium, so this is premium. Okay, this is premium. gets filled, that will determine if I will buy gold. Okay, so my bias on gold is still bearish at the moment. It's still bearish at the moment. Let's go down to, I think this pullback, I think a fair value gap was created at this point. And let's see 1 hour. Okay, so you could see on 1 hour, we had a fair value gap here. Okay, we had a fair value gap here. And we had a breakout block here. The order of priority, breaker block, you consider breaker block before fair value gap. Okay, so that could be the reason price didn't come to fill this fair value gap. Okay, so my take on gold is still bearish. Bearish. Okay, Mr. Chris, good morning. USD JPY. USD JPY. Okay, let's start with the daily time frame. Huh. So you can see the daily time frame. Yesterday candle, yeah, strongly bullish. Yesterday candle was strongly bullish, and I think it created a fair value gap. Okay, it created a fair value gap. So I would have loved to see UJ pull back to fill this fair value gap. Okay, but I'd love to see UJ pull back to fill this fair value gap before going bullish. Okay, and UJ is likely going to fill this fair value gap. Okay, UJ is likely going to come fill this fair value gap. I would love to see UJ pull back to this fair value gap before buying it. Okay, my bias on UJ is still bullish. Okay, if it doesn't pull back to fill this fair value gap, at least it should fill this fair value gap. Okay, it should fill this fair value gap. If it doesn't come to fill this fair value gap it's created here, you can see that price has tested that fair value gap, but that gap has not been filled completely. And I know a lot of retail traders would have bought from this point. Yeah, this is an AMA candle. Okay, some will see this as AMA and they would buy. Some will see this as breakout from a resistance. You can see we had a resistance level here. So most retail traders, that's what you've been taught. When price breaks out from the resistance level, that's a breakout and you want to buy. Price broke out, a retest, right? So a lot of retail traders would have bought. You can see price broke out, retest. So a lot of retail traders are buying USD JPY, and most of them, their stop losses will be residing at this previous low. So they might want to come clear the liquidity residing at this previous low before going bullish. So I'd like to see UJ pull back to fill this fair value gap, sweep the liquidity residing at this previous low before going. Network is really. I hope that is clear, Mr. Chris. I hope that is clear. If you have any question, let me know. That's my take on USDJPY. Buy USDJPY to this zone. Buy to this zone. 145.29, 143 points. That's about 130 pips market price. And if you are buying from the current market price, ensure your stop loss is below this fair value gap. You can use the low of this candle. This is about 50, 60 pips. Okay, 60 pips for about 140 pips. That's a good risk reward. That's above 1:2 risk reward. Okay, so that's my take on. Let's see what's happening on 1 hour. Let's see. Okay. Okay, so that's my take on USD JPY. With what I'm saying on 1 hour time frame, USD JPY might not come back to fill this fair value gap. Okay, it might not come back to fill this fair value gap. Okay, so you can go in with 50% risk. Okay, if the normal lot size you use in trading is, let's say, 1.0. If you're using a standard lot 1.0, you can go in with 0.5. Okay, you go in with 0.5, set your stop loss using 50 or 60 pips. If price pulls back into this fair value gap, you take more trades. Okay, everything in trading is probability, nothing is guaranteed. You might be waiting for the pullback, and the pullback will not occur, will not take place. So it's best you go in with small lot size. At least if the market decides to go up, if price decides to go up from that point, you'll still make little profit. You still make little profit. It's also when you know the direction of the trend and you don't take advantage of it. So you go in with if you had bought GJ from this point yesterday, let's assume you even missed this opportunity, you entered from this point, set your stop loss using the law of this candle, that's about 50 pips, and you go for 80 or 100 pips, you can see. So buying GJ at the current market price is at a higher risk. I can't buy GJ at the current market price. It's best to wait for retracement, which might not occur. Okay, the retracement might not occur. Okay, it might not occur. So it's best to wait for a retracement before you buy. Okay, if I want to risk buying GJ, I would like to see price fill this fair value gap. This is where I would consider, buying GJ. If GJ does not pull back to fill this gap, I won't take a trade on GJ. GJ is buy, it is bullish. GJ is bullish. Sorry guys for today's streaming. The network is very bad. The network is very bad. Do you have any question? Let's see, Australian dollar USD. Okay, Australian dollar USD also is bearish. It's bearish. Let's start with the daily time frame. I think yesterday candle closed strongly bearish. Yesterday was bearish, and today, I think after the close of yesterday candle, a fair value gap was created on. I think a fair value gap was created on 4 hour or 1 hour time frame. So you can see on 4 hour time frame, a fair value gap was created, and I think price has filled that fair value gap. You can see this is the fair value gap, and you can see the pattern that is forming on the 4 hour time frame. The current 4 hour time frame might close as inverted armor. Sorry, as a doji or spinning top. Or spinning top, and if it closes below this zone, that will be a valid confirmation to sell Australian dollar USD. Okay, wait for the current 4 hour candle to close below this zone. So guys, that will be all for today's session. Really sorry for the poor network. Sorry for that. It's beyond my control. Okay, so that will be all. Wish you guys a profitable trading day. Look forward to having you in our next class. Bye for now.